Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, February 3rd, 2023. It's now 5:59 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark, looking back to end of October 2021 because I have changed the combo setting from strict to less strict, and you can see the combo 13 at the end of October up here in the left corner. It used to be over in December with the sequential over here, so we're just moving it back a little to look there. And back during that period, end of 2021, it was more advantageous to have the strict combo on because that gave us a better indication of the topping pattern in this area, 2022. I'll zoom into the current area now. I have lines turned off for viewing right now. We'll look at those after the other indicators. The S&P 500 has printed the combo and sequential cell setup 9 end count. I have the sequential hidden up here so that we can view everything else, but it's there up there. And printing that 9 count is truly a milestone, as the cell TDST moved up from 3,500 something to 3949.70. So there's our floor there for major support, and breaching these TDST levels, whether it be sell or buy TDST to either side. So you breach the sell TDST to the downside, that's pretty serious. And when it's qualified and confirmed, that's devastating. So breaching them to the upside like this buy TDST is worth watching very closely for confirmation. So it would need an up close followed by a down close followed by an up close above the level in question, and then the confirmation bar after that. So as of today, it has breached the buy TDST to the upside and nailed the 100% qualified and confirmed propulsion exhaustion up. So I expect more upside eventually. We might have a setback, and that's normal, but I do expect more upside. And the less strict combo cell countdown 12 has printed. So that's why I made it less strict, so it'd be easier to print the combo cell countdown 13 in this case, because this run is quite stretched to the upside, and the trend factor levels have all moved up to this new high here, and the first one is here, and then you can see the second one here, third, fourth. You can read the tags over here on the sidebar for those levels. And I can't fit any more indicators onto the SPKX chart that we use up here. So I put this exhaustion alert over on the cloud chart. I'm going to try and make room somewhere so we can have it all on one chart. So this should be taken seriously, as when it happens up there, it's usually a good indication of more downside right away too. It doesn't take but 1 or 2 bars and there's a downdraft usually. So let's see what happens with this one now. We've had an updraft the other day, yesterday, and it looks like there's going to be a downdraft today. So between that exhaustion alert we just looked at, printing the combo and sequential cell setup 9 end count, we're on wave 5, and the megaphone cell 7 end count printed, and about to print the less strict combo cell countdown 13. Things are getting stretched to the upside. See the explanation about wave 5 I read right out of the book, yesterday's video on the 2nd. So between all that's going on with those indicators to the upside, I have been lightening up a little bit on some of the longs I have in the portfolio. And it looks like we're on the last supply line to the upside here. As you can see, that the one we're right on now just about goes back to the 2022 beginning of January here. So I don't know if there'll be any more printed. There could be at the very top. There's a possibility there, as the point here has two lower highs surrounding it on the left and right. So there's another candidate. If we continue moving up, there could be another supply line up here. Just guessing though. We'll have to see what happens here. So for this morning on the 3rd, price would need to open above this supply line, which for today is at right here 4178.32, this daily ongoing supply line. So let's see what happens there. If it doesn't open above it and it closes above it today, this is another candidate for disqualification. And right now this is already fading opportunities now as it stands with all these disqualified supply lines. And if we get another one compiled onto the wave 5 up, megaphone, exhaustion alert, etc., this could be more confirmation for you to lighten up on longs and possibly look for shorting opportunities. I did short, and we'll look at that next. The NDXT daily chart showing the diamond bottoming pattern in red. You can see that it has gone parabolic with this line in blue here, and it came to rest right under the DeMark relative retracement 0.382, and I shorted it up here when it stalled right at this top of the candle here. So I'm short the NDXT, and I used this instrument here, the QTEC, which tracks that NDXT index. And my decision to do that was it has gone parabolic, and it is right at that relative retracement 0.382. So we'll see if it can qualify and confirm this level, and then I will jettison that short buy to cover if that happens. And the other reason, right out of Bulkowski's book, is that when it hits this 50% target 88% of the time, this is where the throwback happens to the breakout point right here. And if it stays there at the breakout point and starts moving up, then there's less probability of it hitting these upper targets. The percentages of doing that go way down. So it needs to become qualified and confirmed right here, this relative retracement. And then we can start setting our sights up here. First this downtrend line, maybe this higher high here in purple, somewhere in this area. And if it really does do that, qualifies and confirms this relative retracement 0.382, that's when it's one of the hardest things to do is switch. So get out of the short and get on board with longs. So I'll try to do that. Here's the other instrument I've been using for protection, and boy is this thing a wild card. The volume yesterday was only 71, and I watched this one pretty closely, and you can see the price tag for the low at 1666 right here, and I'll tell you it went lower than that. I picked it up starting around 1666, and then it went down 56 all the way down to 23, and I picked it up there and just kept buying it as it moved down every 10 cents. So I ended up with about 100 of these. I had a few in there before, but I really went wild on that one. So another one that could make or break you. It's an interesting instrument, the VIX spike futures. So it basically tracks the VIX as it's moving along through the day. So you can see there was a spike up there, and the bid and ask is very close together, like by a penny. So it's a halfway decent instrument to experiment with, but there's so few in there. The volume is so horrible that the one person that buys a lot of it, you can see, just dumps it 1,500 at a time. It looks like it's about the going rate for that person, whoever he is. Either they buy about 1,500 or they get rid of 1,500, and when that happens, yeah, it goes up or down quite easily. And you can see the MACD way in the basement, not as bad as it has been in the past, but the RSI has been down in the dungeon below 30 for quite a while here. And the CBOE total put call ratio chart shows that it's right on that line here, so I expect it to go under a little for today, and then it just could hook around and head back up, and that would mean put buying or protection buying. And as we saw in the SPKX, that's a okay instrument to deal with, but you have to stay on your toes with that one. Or if you're an options trader, which I am not, you could do the whole put call thing. The S&P 500 support and resistance big board chart shows the gray areas at the former bottom of range 2, which is the top of our range now here in light blue, so we're right there. The pivot point and S1, and to the downside is S2, the weekly broadening top in dashed red, disqualified by TDST, and the daily high channel 3, which we've had one day above, and I took this one off. That's not a target. And to the upside is the daily Bollinger Band upper band, the daily ongoing supply line, the uptrend line from 6/16/2022 and up in the 4200 zone is R1. And the NYSE traditional McClellan breath oscillator to get back to zero would require 3,125 decliners over advancers to get back to zero. So it really took a jump up from the other day, 2765. Have a great day.